Greetings and welcome to a Severson Strege Lunch and Learn webinar. Today's topic is going to be the importance of long-term care insurance. I'm TC Conley, a financial planner here at Severson Strege. I will be acting as your host today. If you have any questions during today's presentation, please send them via the chat function and select the panelist only option. In today's presentation, I will be partnering with insurance professional Josh Heisterkamp, whom I will introduce here shortly. In an effort to save time today, if you'd like further details and are curious about my background, I would encourage you to visit our website at onlyworkforyou.com. Here's what you can expect for today. This is strictly an educational presentation, and there will be no sales pitches, obligations, or general products talked about. However, we will do a deep dive into long-term care insurance. I will open up with a general overview of who Severson Strege is and how the insurance ties into your overall comprehensive financial plan. Then I'll turn the reins over to Josh, who will present on long-term care insurance. We'll conclude with a question and answer session. Again, feel free to type any questions that come up throughout the presentation in the chat box. Please make sure to select panelist only in your options. We want to make sure you know how this information can be applied to your personal situation. Therefore, we'll be offering a confidential, free consultation for interested parties to talk about your personal situation if desired. Again, no sales pitch, and this is 100% free. So, who is Severson Strege? Well, we are an independent fee-only financial planning organization. We do not charge any commissions and do not sell any products like insurance or annuities. Rather, we collaborate with licensed professionals in these areas. All of our financial planners are going to be certified financial planners. Additionally, many of our planners are going to have additional credentials. These credentials and more about our planners can be found at our website at onlyworkforyou.com. What is comprehensive financial planning, you ask? Well, we just don't look at investments. Rather, the Certified Financial Planning Board has identified that there are 5 key components to each financial plan. We at Severson Strege believe that there are actually 6 components for certain individuals. To provide guidance on any one of these areas, it would be best practice to understand and know how each one of these areas are interlinked. For example, with today's topic, we cannot appropriately give retirement planning guidance without anticipating, forecasting the ramifications that a long-term event could have on a client's financial well-being. Hopefully this sheds some light on how many of these components are very much interlinked to one another and should not be thought of in a compartmentalized fashion. Financial planning involves a holistic, comprehensive approach with the goal of providing peace of mind, simplicity, and clarity in complex financial situations. I'll now turn the reins over to Josh to do a quick bio and dive into long-term care insurance.
Thanks, Tyler. I appreciate it, and I appreciate Severson Strege inviting me into this conversation to be able to talk about long-term care. It is a subject that, quite frankly, I get asked about quite frequently, and people oftentimes coming with many misinformed pieces of information. And so being able to have this as a talking point today is a wonderful piece. Once again, as Tyler mentioned, this entire Zoom call really is purposed for the point of providing you with good information. At the end of the topic here, at the end of our conversation together, there's a question and answer time. I know Tyler already mentioned that to you. I would strongly encourage you to take advantage of that. Quite frankly, that will probably be where the vast majority of our pertinent information is discussed, because those are questions that are going to pertain specifically to situations that you may be going through. So take advantage of that time in the question and answer box at the end. But to give a little bit of background to me, I've been in the insurance industry for about 12 years, and for the vast majority of that time doing all property casualty, life insurance, and long-term care needs. And so I've been able to see a very broad array of different situations, different people coming in with a whole bunch of different needs, both financial needs and care needs. With that in mind, I think there's many different things that we'll have to be able to discuss today to help put some good framework to the conversation around long-term care. A little bit more, my wife and I, we've been married for almost 10 years, and we have 4 daughters. And yes, you heard that right, we have 4 daughters. I live in a princess castle, and yes, I also thoroughly enjoy it, coming home every day to lots of hugs and a lot of fun with my princesses. So with that, though, let's go back into long-term care, and let's go ahead and get started. So a question to ask, and once again, this sounds a little bit redundant, but what is long-term care insurance? really, we need to ask this question from a governmental standpoint to a certain degree, because we need to understand what framework they put up so it can help us better understand on a broad spectrum what type of care you're seeking and needing to have covered. The U.S. Department of Health and Human Services classifies long-term care insurance as long-term care insurance policies that reimburse policyholders a daily amount up to a pre-selected limit for services to assist them with activities of daily living, such as bathing, dressing, or eating. You can select a range of care options and benefits that allow you to get the services you need where and when you need them. So in essence, what they're saying is that there is long-term potentially going to be a care that you need to be provided by a nursing facility or someone in the healthcare profession. And there's a cost with that. And the purchasing of insurance is there to help mitigate that future risk that may or may not actually be there in the future. Once again, it provides peace of mind. Another situation that I like to bring up is actually Dave Ramsey speaks a little bit about this as well. And a lot of people assume that Dave Ramsey is against long-term care insurance or life insurance, things of that nature, but we need to actually see what he has to say about this. It's not like buy term, invest the rest, as we've heard him say on many other subjects. Actually, we see a little bit different story here as it regards long-term care insurance. And later on in our topic, we'll cover why he says this, okay? But one statement here from him says, long-term care can be an emotionally charged topic. After all, no one wants to think about themselves or a loved one being incapable of living on their own. But if you want to make a smart financial decision and protect your nest egg, long-term care insurance is a must. All right, so once again, we're seeing it from someone that a lot of people think is more conservative more often than not. But really, what he's saying here is this is something ought to be part of your plan. Now, what part in your plan long-term care coverage actually plays is very important. So let's talk about 3 different ways that you can actually care for yourself, okay? What ways can I insure against my long-term care need? In general, there's 3 different ways to provide for long-term care. These sound, once again, very simple, but we'll dive into them a little bit here. Fully insure the risk through a third-party insurance provider. That's where you choose to say, I want to pay an insurance company to take on as much risk as possible. Really, more often than not, this one is not the one that's used because costs of care are going up. We'll talk about that again later on too. So that there's a moving target as to how much long-term care costs. And so buying an amount that fully covers, not typically the route that people choose to go because that's a moving target. More often than not, people choose option number 2 here, which is split the risk between yourself and a third-party insurance provider. You really need to be working with a financial professional to be able to decide what level you want to put into having an insurance provider covered for you and how much you want to take on yourself. Having that plan in place is very, very important. Okay? The last option available to you is to take on the full risk and self-insure. And actually, I would encourage people to consider this as an option. Long-term care does come at a cost. And there are people that have the financial ability to be able to self-insure against the risk. But once again, these are things that I would strongly encourage you to take to your financial professional. With that, let's go ahead and get started here. And we're going to actually hit on the first main point about long-term care insurance. What should I do about that? Okay, my suggestion with long-term care, you need to definitely, I strongly encourage you to take everything we discussed today, all the topics we hit on regarding long-term care, meet with your personal financial planner. They are equipped to help you navigate these decisions, and that's what they're paid to do as well. So use them. Don't be afraid to use them. They are part of your financial team, and they will provide you with sound advice to make sure that whatever decision you make is best for you. All right. Go ahead and go into the next piece here. So there's a little bit of information that I think is really important for people to consider as we're going through the framework of long-term care. So let's build that framework out and talk a little bit about the costs and also the risks. Starting out with the risk, though, 69% of the people in the United States of America will need long-term care. Now, oftentimes people actually ask me, will I really need that? The numbers, and this is actually provided to you by lifehappens.org, a wonderful organization that works on your behalf. They say 69% of people in the United States will actually need that care. So if you're a couple, consider that more than likely at least one of you, and actually a good likelihood that both of you would need long-term care. This will definitely impact what you do for your long-term care needs. Now, some people choose to pass it under the rug and not discuss it and hope that it never happens. There's always a plan for something. It's just whether that plan was well developed or not. I would encourage you to take note of that and take it to your financial planner. Discuss what works best in your case between you and them. Women currently need long-term care for an average of 3.7 years and men for an average of 2.2 years. Okay, now that sounds a little odd to some people, but those are the real numbers. Oftentimes when people need that care, women are using almost twice as much time of need. And that is going to definitely incur a big financial responsibility to take on, whether that's covered by you or an insurance provider or a mix of both. So note that consequently, women typically cost significantly more for insurance if you were to go out and buy a policy. Another quick note here, 20% of today's 65-year-olds will actually need care for about 5 years or more. So as we're starting to talk about these numbers as to how long you need the care, consider the fact that about 20% of 65-year-olds will actually need that care more than likely for more than 5 years. Very important when you're drawing up a financial plan for what you're trying to accomplish. But once again, if we go back into this, you need to not just consider the state you're currently living in and having an understanding as to what the care costs for in your relative area, but even more so, I would say, where are you going to live if you needed long-term care? A lot of times what I see, people want to move back close to family. They want to live somewhere where their relatives can see them, help take care of them even sometimes. This may even incorporate in-home care to certain degrees. Understand what that will look like. If someone wanted to move, let's just say you lived in Oklahoma, but your family lived out in New York, and so you want to be able to move closer to them. I would want to understand what the cost of care is in the area that I'd be looking to get that care provided to me. Okay, so very important. Hopefully that gives you a general idea as to the cost, but also why it's very important to be discussing these things with your financial planner. That cost difference alone can definitely affect the policy you put in place. A couple more quick numbers helping build out the framework here. I put in here, it's a shocker, but it should be no shocker at all. Costs are on the rise. But people always want to know how much. Really, how much is the cost going up? Okay, estimates show right now from the experts that have studied these things that in 2028, that the cost will be up about 25% from what I just showed you a moment ago. That means it's an average increase of about 3.2% a year. Okay, now these numbers, just so you're aware, from the sources that I've been able to provide, they've been the sources of all these numbers that I've provided to this point have all been cited on the bottom of each of the slides. But those different sources provided those numbers prior to coronavirus. So one thing I do want to make sure you understand is that oftentimes costs are accelerated when major life circumstances like coronavirus have come. And so be aware that 3.2% may actually be somewhat on the low side as far as percentage growth of medical costs and services to be provided for someone needing long-term care. Okay. Another thing to also note, and this is where I would pay attention to family history, things of that nature that may impact what you're trying to do for your cost of care. Alzheimer's units and other situations like that where there is much higher need of care, much closer attention needing paid from nursing facilities, things of that nature. Those costs typically go up 2 to 3 times what we previously mentioned as well. So once again, something to make note of is what type of care are you looking to cover for, and how do you want to financially provide for that? And keep in mind, there's those 3 routes that we mentioned at the very beginning, all of them with varying degrees of how they care for you, and making sure that you talk to your financial professionals is a very big deal. If there is only a need for assisted living, then actually, if that were the case, your care would only be about half. And that is important to know as well, because there are many people that do take advantage of long-term care facilities that provide assisted living, and oftentimes policies do actually provide coverage for that because once again, it's going to come down to acts of daily living. We'll discuss that in a little bit. But assisted living facilities are actually becoming much more popular. And so be aware that sometimes those are things you could qualify for with a long-term care policy. And that rate is typically about half the cost. So sometimes your coverage will go further. Okay. Another little piece, if I was going to try and explain to someone the costs of long-term care, those degrees, it's going to vary based on the amount of coverage a person wants on a daily limit, their health, their age, and really, quite frankly, the build of the policy itself as far as what it covers can also be incredibly vast. So instead of trying to go through a ton of details, I'm going to put together just a little bit of synopsis here for you to consider as far as the costs go. So let's just say that we have a healthy man that acquires long-term care insurance for $1,725 a year, and he's age 50. He may have peace of mind in his 50s due to buying that coverage, but it does come at a cost. So we need to consider that. A person will regularly ask me, what age should I buy? Well, that really comes down to, let's take a look at a crystal ball that neither one of us have. So we don't really have a great way to answer that question. You could have something significant happen in your 50s that you never expected to happen, and you wish that you had that coverage in place. That's where this 50-year-old that bought the long-term care policy would have a general peace of mind that someone that's waiting until a more advantageous year to buy may not have that peace of mind along the way. So once again, very important to consider, what are you buying and what are the purposes of it? For some people, peace of mind is well worth the price of buying it a little bit earlier than what some other people choose to buy. Let's consider, though, if that person would have waited until about age 60. So if that man is still in the same health at age 60, he would be looking at premiums of about $2,170 a year. So not a ton amount difference in just waiting that 10-year period. One thing to note is that about year 2 or 3 after that 60-year-old continues to go, if they didn't buy then, it would actually start to compound very quickly. So do be aware of that. I don't want it to sound like just because they wait till 60, it's going to be cheaper if they wait till 70. No, that is when it does start to increase more significantly. But let's take a look at a couple questions here. So what if that 50-year-old would have invested his or her money? Well, that is something I would definitely encourage you. Take that to your financial planner and work with them on that, because they'll be able to show you the differences as to if you invest that money versus if you have the peace of mind of that long-term care policy and what it's going to do for you, okay? But what if that 60-year-old's health would have changed? Well, they may not have been eligible, first off. That's very important to note. Then additionally to that, the cost could be much more different. Matter of fact, actually, coverage, if it's accessible, could even be limited as to what it covers or how it covers a person. So all very important things if you choose to wait to consider. Then also the inflation of the coverage portion of long-term care is also important to consider. Just to make brief mention here, there's a piece on a policy that has to do with the increased cost of living expenses. And there is a percentage that's incorporated on almost every policy out there, where every year the policy limit that you've bought begins to increase from one year to the next. And the purpose of that is to keep inflation costs in mind for your care. So a person that bought at age 50, that policy that they purchased, that they're paying a steady premium on, is going to have that cost of care that they bought for at one point. It's going to be higher by age 60, where the 60-year-old now has to be able to pay not just for the level of coverage. Let's just say it was $250 back when they were 50, they chose to wait. Now that care may cost $300, $325 a day. So if we're trying to consider those things, now they have to buy a much bigger policy, where the 50-year-old, their policy's grown probably that level of care on a daily limit, but they have a steady premium from the very beginning. So that's just another piece to consider in when you choose to purchase your long-term care policy, if you choose to get one. So as we go forward here, we're going to talk about using some of these numbers to make informed decisions. And part of the reason why we're having this entire Zoom meeting to begin with is to make sure that you guys have the ability to be able to make informed decisions. One of my favorite proverbs from Scripture is, prepared plans by consultation and make war by wise guidance. You have the ability to do that, even in a situation like this, where you can use your financial planners, and they're really the ones that instigated even this call initially, to be able to provide you good information. I can tell you that the way I'm geared as well, I want to be able to provide sound advice to people. Take advantage of that. It's beneficial for you to be able to make life decisions that hopefully will allow you to be successful as time goes. So let's talk a few more details here to consider regarding long-term care. What initiates a long-term care policy? And oftentimes I know people come to me and they have questions about long-term care because they hear that they need it. They constantly get pushed to buy long-term care, but also there's been a lot of people that have bought it with the wrong intentions. They did not understand what they were buying, how it would work for them. And so really, this is where I want to cover a few different things about long-term care that hopefully will answer some of those general questions. But most policies initiate their coverage after what is called a waiting period. That's like your deductible. So for your home insurance, you may have $1,000 or a $2,000 deductible on your home insurance. The waiting period here on a long-term care policy is very much like a deductible. And so most of these are between 30 and 90 days worth of time frame, where basically the coverage that you receive would be on you as far as a financial responsibility up front. More often than not, people do choose to go with a 30-day term as far as that elimination period. But I do have people quite often that part of their plan, they have budgeted to cover for the first 90 days, so 3 months worth of care. And so once again, you'd want to take in what is that average daily limit and what is it likely to be at the point that I plan on probably needing that coverage to come into play. And can I afford a bigger waiting period or deductible, if you will? The waiting period begins based on a filing of a claim for a person that's not able to perform 2 of the 6 daily acts of living. And people ask all the time, they can typically name 2 or 3 of the daily acts of living so that they're here provided to you. I've written them at the bottom here, but it's bladder and bowel control, getting dressed, personal hygiene, feeding, bathing, and mobility. And oftentimes the questions that will get asked in an underwriting process will actually be geared heavily towards these pieces, mobility actually being a very big one to consider. And once again, if you want sound information for more of this, I would encourage you to go to lifehappens.org. It is actually a website that is beneficial for all the consumers. It's in place for consumers. And it's completely funded by consuming sources as well. So I would strongly encourage you to go out to that website. It'll provide you sound information on all the things we've discussed today so far. Go ahead and go to the next piece here. So once again, I alluded to this early. People ask all the time, when should I be looking at long-term care insurance? Don't hold a crystal ball. I can't tell you when you should and shouldn't buy. That really needs to be a decision that you make. Every person's need is very different. So we will cover some underwriting things to consider here in just a moment, but I think every person ought to start looking at different options earlier on. Get together with your financial planner. The earlier you start meeting with your financial planner, even if you're in your 20s or 30s, the more precise your plan can be built up. And quite frankly, you might be able to do the self-insured route. The earlier you start the plan, the more options that are going to be available to you. Now, that does not mean buy right now, but it does mean have that conversation. Start building your plan right now. That is what I would encourage every person to do. But do recognize that all of that can change at any moment. So very important to know what you would do even if those situations arose earlier than you had initially planned. In general, people should begin looking in their 40s to 50s. I do want to put that in there. That if you haven't started looking by that point, I think you ought to start right away, taking a look at those different pieces. There's still some eligibility available for those that get into their 60s. Beyond the 60s, I will say it's not that you're ineligible, but it does become extremely difficult to attain long-term care coverage. So do note that. So here's some underwriting things to consider as you're looking at how do I build my plan? When should I be planning on having my long-term care coverage come into play? Once again, we don't have a crystal ball, but maybe we can use a few things to help draw out a better picture for each of your individual cases. So age. what age you want that policy to start. So if you're 50, 52, 53, 55, but you're saying that I don't think I'm going to need that coverage till age 65, that may definitely impact between you and your financial planner what level of care you want to financially provide for, how much you can set aside before then, or how much you want to invest into a policy to help fund those things. So age is an important factor. Probably the biggest factor, though, is actually the item I've listed second here, which is family health history. Consider what your family history has been like, your parents, grandparents, siblings. Take into consideration your family heritage is incredibly important, and quite frankly can sometimes play or act like that crystal ball for us to give us a good indication as to what kind of care you may need based on what you've seen in the past. And the second best piece to be able to tell us is also your personal health history. What have things been like in the past for you? That is information that I would encourage you, don't hide that from an insurance professional or from your financial planner. That actually is probably, like I say, those last two pieces are probably the biggest items that we could use to discuss what your real care needs are. So don't hide those. It's actually, it's a valuable piece to be able to expose to any financial professional that you're working with to help make sure you have the most informed decision made. The other things that you want to consider would be the type of care that you're desiring. The higher level of care that you want to provide for will change the financial situation. Another piece is the personal financial situation. While we're discussing all of these different pieces, there are some people that will walk out of here and they will either understand that either they're able to completely take care of the care themselves financially from a financial perspective, or they don't have the financial resources to be able to provide for these things. Still, these are valuable information pieces that may change the way you budget other pieces of your financial plan. So once again, this is why, as I've said multiple times, be involved with your financial planner. The other thing, which going back to the very beginning here, talking about average costs, think about the regional cost of where you would be looking to receive that care. It is very important because every state has a much different level of financials associated with the health care that you would need if that need ever arose. So look at the consideration. One of the examples I gave is if a family member lived in one state, but they said, you know what, I want to live close to my relatives, to my children, or some other sibling or good friend, relative of another sort, but they're out of state, they're in another spot. Pay attention to the financial situation. I've had people, I've even encouraged them, go look for the care facility that you think you would want to be provided and receive care from. Ask them what the costs are so that way you can provide. They're not going to hide that from you, especially if they're thinking that long term it may be someone that they may be providing for. They're not going to hide those numbers from you. And so I would strongly encourage a person, dive in on those regional costs. That is one way to be very informed as to how much that care may be as well. A couple other pieces to take into consideration here. I have people that reach out to me. Sometimes they have some small health concerns, and automatically they assume that they can't get long-term care coverage. First off, I would tell you, don't make that assumption. It may impact rate, but more often than not, it actually doesn't impact your eligibility. Now, that's not always the case. Age, once again, will play heavily into eligibility because the longer a person has a certain health risk and the later on in life they are, it does become harder to get that long-term care coverage. But here's a few numbers for you. The National Center for Biotechnology Information posted an article. This was back in 2017, so not that long ago. And this is what they put out. About 75% of all the people who apply for some form of long-term care would actually be eligible for care. So where a lot of people think, oh, I don't know that I could get it, the numbers prove that actually a vast majority of people would actually be eligible to receive that financial care. The chances of eligibility substantially decrease for every pre-existing condition each person has for every decade of age a person has attained. So for example, let's just say that you had some minor health issue, but you were 40 years of age. Well, that will impact your longevity of life. but it will also impact when that care may come in from a calculated standpoint. Every company has algorithms out there that they're using to calculate when they think you'll need that care. So let's just say at age 40, you start looking for long-term care. The insurance company will actually have several years to be able to accrue expenses from you before they have to start paying for all these different needs. Okay, so actually the earlier on, the easier it is to get. If that same person waited till they were 60, because that care may be needed in the next 2 to 5 years, that's when eligibility becomes very difficult, because an insurance company may not be able to actually accrue the funds they need prior to that need arising to be able to fund that person's policy. Once again, doesn't always render them ineligible, but the cost.
We appear to be having some technical difficulties, so bear with us. Josh will be right back on. I appreciate your patience. As promised, Josh is back. So
hey,
appreciate everyone's patience.
All right, we're back. Well, just to make use of everyone's time best, and this is what you get with technology in today's time, but to make sure we're paying attention to everyone's time, I know I was briefly going through some of these numbers before everything, so to give some cliff notes. I'm not sure where it cut out. These numbers lead us to understand that more often than not, a person is eligible for coverage. And so I don't want a person to assume that they're not able to be covered for a long-term care policy. Get in, meet with a financial planner, meet with your insurance professional, let them help you decide and find out whether you could actually get coverage enforced or not. More often than not, there is eligibility out there for most people. There are things that make a person ineligible, yes, but don't assume that you're not eligible. Go and find out, be informed. I can tell you, I would rather every day of the week have a person come in that I'm talking with and us work through that together. Even though it is my time, I would gladly give that time to help a person understand that they're covered or not covered, as opposed to someone assuming that could have had covered all along the way. Definitely meet up with a financial professional.
Then to further that, you can also work with your professional if you aren't covered to make the proper, put the necessary steps in place to plan accordingly. In case an event of that nature does happen. So to add some color to that as well from a financial planning aspect.
Yep, absolutely. So real quick case study here. And I find it really interesting. I'm going to bring out a piece actually from Dave Ramsey. It's interesting to note Dave Ramsey is actually a proponent for long-term care. And oftentimes, when we consider Dave Ramsey from a life insurance standpoint, we know he says buy term, invest the rest, and all of these different pieces. And I know different people walk out with different philosophies, but I thought it was really interesting. Dave Ramsey is actually an encourager of long-term care, specifically because of the fact that there's such a vast need for it, that the numbers show that more often than not, a person will actually need that care. And so it is something to consider. So he actually put together a case study, if you will. And so I think that this shows a general picture as to why we discuss long-term care. Why is it even important? So let's go ahead and read this out loud here. Take Joe and Susie, for example. They weren't always smart with their money, but in this case here, they worked very hard and built up a nest egg of $300,000. When Joe was 67 years old, he developed Alzheimer's disease. And at first, it wasn't too bad, but Susie used some of their nest egg to hire a home care specialist to help with Joe a few hours every day. But as his condition worsened, Joe had to go into a nursing home. Sadly, after 5 years in the home, Joe passed away. Susie, now 72, is healthy as can be for her age, but she has to work full-time because her husband's stay in the nursing home devoured most of their nest egg. This is really a solid picture as to why people need to consider what they're going to do for long-term care. And I'm going to refer you in that same statement back to the very beginning. You may choose to self-insure your risk, and that is totally a plausible way to go about things from a financial perspective. Understanding what you're going to do and what the ramifications of each decision are incredibly important. In this case here, Susie is going to be working where she could have probably been spending time with grandchildren. She could have probably been able to provide gifts for them, spend time with them, take them to the park, a whole slew of different things. She may have been able to move somewhere. Maybe she had planned initially that she wanted to be able to move somewhere to be able to enjoy the rest of her life, but now she's got to stay where she has work provided. There are so many different things in how this will actually affect the surviving person from a long-term care need. And so this is why Dave Ramsey, and this is why I also would encourage people, take the time to develop a plan. Invite your financial planner into that. And an insurance professional is very good to incorporate into that discussion as well, so you understand what would those costs even look like. But once again, hopefully this provides a good image to people as to the type of ramification if you didn't have a plan in place. I think with that, if I'm not mistaken, really, I want to make sure we leave plenty of time open here for questions that you may have. I would encourage you, if you haven't already typed in a question, type in questions. I want to make sure that I'm providing as many answers back. And quite frankly, this question and answer time could probably be some of the most valuable time that we have here as well. So please, if there's questions, make sure you ask them.
And please remember to send those via the chat function and select panelists only to direct the messages to. And for our Q&A portion, we're going to be joined by our Communication Director, Julie, and our Chief Planning Officer, Matt Roberts, as well. You'll now see them.
Great. Well, this is Julie, and we've had some good questions come in so far. So I'll go ahead and ask these questions in order that they came, and one of you can address those. So one person wrote in and said, some articles say that long-term care insurance is increasingly covering less than more people are expected to pay. And she's wondering if in-home care is covered under the long-term care policies.
Yeah, that's a great question. And the answer to that, so once again, I think what we're going back to is a daily limit. And once again, that's where you want to pay attention to the increased costs for what it takes to care for a person at a care facility. That can also be an answer to the question in-home care. Not every policy will cover for in-home care. So that is something that if you would like to have in-home care, that needs to be part of the discussion with your financial planner and also the insurance professional. In-home care is a very nice option, and once again, there are several companies that will extend for in-home care, but it is something that you want to make sure is on the policy. There are many companies just as much that will not cover for in-home care. They want you in a care facility where things can be heavily regulated. And so great question, but really the increased cost of care, going back to the initial part of that, that is where you want to give you an acronym. It's called COLA, C-O-L-A. That is a portion of your policy that talks about the percent increase from one year to the next, that it will extend that coverage. And that's why that piece is very, very, very important. Hopefully that answers your question. If there's more to that question, feel free to write Julie some more.
Good answer, Josh.
Well, great. So the next one was kind of a comment, but a really good comment. He said, if you have a long-term care policy and you or your loved one is in a position to begin receiving benefits, try to avoid getting caught up in the emotionalism of the situation. So long-term care policies likely have deadlines before which you need to notify the insurance company of. So my question that I think we could ask in general is, what kind of deadlines do the long-term care policies have?
Yeah. So once again, this is where I would also encourage a person to, going back to the comment of the waiting period. If you have the ability to start receiving care and you need that care, don't wait, because there's a waiting period. So by the point you file, understand that even when you do file, there's a waiting period for that money will come in from your financial institution that you've chosen to use. So I would strongly encourage a person, yes, there are deadlines for when that need arises, but more importantly, I would say from a financial decision, if that need arises and you know it's there, don't wait. Go ahead and file it. Okay, now that is something you can work with your insurance professional on and also the financial planner as far as timing goes, but I would encourage you, don't make that decision alone. Whoever mentioned, Julie, as you just said, regarding removing some of the emotional, it is a very emotional spot to be in. And that is where I would incorporate the team that you've put together, the financial team that you've put together, make sure they're part of that. When that need arises, bring those people in right away. They will make sure that everything's in place for you. They'll help educate on that decision. Every policy, in direct answer to your question, Julie, every policy is different on their deadlines. And so for that reason alone, I would tell you to go back to the professionals you put in place. But once again, the waiting period, that is money out of your pocket. And if it's not going to start until the day that you file that claim, very important to consider that right away.
And I think Josh really nailed that one on the head. Don't hesitate to reach out to your financial professionals. They are part of your collaborative team. We're here to help you. I know going through the process can be quite strenuous. So again, you have these people on your team to help you, so rely on them.
Great. So the next question is short, and she asked, would Medicare pay for the first 100 days? And that ties into a question I think we've had come in to Sievers and Strege before is, wouldn't Medicaid cover your nursing home facility anyway? Why would you need long-term care insurance? And are there any disadvantages to going that route?
Josh,
You want to tackle this one?
I'll tackle this one if you want to add in a little color around it. But I think it's often misconstrued that Medicare will cover long-term care stay. And so Medicare does not cover skilled nursing care. Outside of the fact that they will cover up to 100 days following a stay at a hospital for 3 consecutive days. And so Medicare Part A will cover that in full for the first 20 days, and then a coinsurance amount will be applied for the next 80 days of your stay. But beyond the 100 days, there is no coverage for skilled nursing care, assisted living, or anything like that from Medicare.
I think that was a very sufficient answer, Matt. So I would leave it at that as well.
Great. So this person had a great question about, do you think the insurance companies have thought about COVID-19 and how it may affect eligibility? And what's the status of that?
Yeah, great question. And I would say from a insurance perspective, COVID-19 has definitely impacted from what I've been able to see just even over the last few months as far as eligibility goes. I would expect that part of the application will ask you if you've been tested for COVID-19, if you've tested positive specifically, if you've been receiving medical treatment, what type of medical treatment, things of that nature. Now, just because you haven't been tested doesn't mean that they'll make you go get tested or things of that nature. That's not the case. However, if you have received care, there definitely will be some questions regarding how much care you received, what the extent of the situation was, things of that nature. So yes, in answer to the question, yes, COVID-19 has definitely played a role in eligibility.
Our next question is, how can long-term care coverage be combined with life insurance, or can it?
Yeah, that's a great question. And I would tell you that there's multiple ways to take care of the long-term care need, one of which nowadays they talk about as a hybrid product, where you actually buy a life insurance policy that gives a long-term care rider, if you will, or vice versa. You can actually buy a hybrid product that focuses one way or the other, technically. With that being said, it's very important to understand that those hybrid products sometimes don't have as much tailoring to them. And so going the traditional route of buying a separate life insurance policy and a separate long-term care policy, sometimes, and I would say more often than not, that's actually the most feasible way to go. But there are many people that do choose to go the hybrid route because it offers, I'm going to say, a more expanded level of guarantees. With that, there is definitely a cost increase in going the hybrid route, if you will, buying both a joint long-term care and life insurance policy together. But once again, every person's need is different. And actually, a hybrid product, sometimes you actually get expanded eligibility rather than if you were to just go for a straight long-term care policy. So you may be able to get care or coverage just by going through the hybrid route. Not all the time, but sometimes there's further accessibility to the care.
And Josh, it might be advantageous to kind of speak on the behalf that with those hybrid policies, how that death benefit and the long-term care, how they're interlinked with one another. It's not like you get both.
Yes. Yeah, very, very good point, Tyler. And so for people to kind of work that question a little bit, essentially, people ask me, so can I get both? The answer to that is yes and no. If you were to, for example, let's just say you needed on a hybrid, that you needed to use some of that long-term care piece of the policy, that would typically have a buy down on how much of the insurance you actually get it when that person passes away. Now, there are typically stopping points where a person can use all of their long-term care and still have a portion of the life insurance left. So,
oh, looks like Josh is frozen again.
I am here.
Oh,
I can hear you.
Yeah.
I can hear you.
Okay.
So, hopefully, in answer to that question, I want to make sure that we're here. Can everyone hear me?
Yep.
Okay, good. All right. And I apologize for the technical issues. So it's, once again, part of the internet, but we're working through it. So once again, knowing that policy, knowing what you're trying to accomplish is very important. But yes, so let's just say you had a long-term care policy and life insurance policy joined together. Oftentimes what you'll see is that the life insurance will pay out typically, let's just say $100,000 to $250,000, no matter if all of the long-term care coverage of that policy is exhausted. That can be a very nice feature to be able to have on there. Once again, understanding what you're purchasing, the cost of it, and the plan that you're trying to incorporate is very important along the way. Hopefully that answers what you're talking about there.
Yep. And to furthermore, when we were talking about how a comprehensive plan really comes together and takes multiple aspects into consideration. So these hybrid plans would be tackling, say, that risk mitigation area. Well, utilizing these hybrid tools, that falls into that estate planning area. So there's a multiple different areas that are all interlinked. So to make a good, conscious decision in your long-term decisions, we really need to take all these, do a full comprehensive plan.
Good answer. The next question, I keep saying these are great questions, but they really are, says, do you ever advise someone who bought long-term care insurance when they were younger to buy another policy to provide more coverage?
Very good question. I would say, what was the limit you bought and what does that policy look like? You know, oftentimes, depending on how long ago that was, if I'm being very honest, the policies from many years ago may have provided even more significant coverage to what we have in a lot of the policies today. So I don't know that I would ever tell a person to get rid of a policy they've had in place for so long. More than likely, I would say keep it. And yes, if there's something to add, maybe financial situations change and they want to buy a little bit more coverage, that can definitely be a part of the equation to get a additional policy for another set limit. So definitely, once again, I think the big piece to answer that, Julie, I would tell a person that's asking that question, what are you trying to accomplish? More than likely, unless that person's done planning for a long period of time, there needs to change over the years, and that plan may look a little different. Once again, go in and make sure that plan is fitting the plan you and your financial professional put together. If it's not, then that's when I would encourage the person to go in and seek restitution to figure out how do I cover the rest of this.
Thank you. Our next question, she says, with boomers, there are a lot of us, it's suggested that to maximize profit, most policies are simply covering way less. Is that true?
You know, the right way to answer that question is that there's a cost for it. That doesn't sound fun to say, but these insurance companies, they are very smart with money, and there's a reason why they're building buildings, why they employ a big amount of staff. There is money involved with the business that they do, and they are looking to grow something. So as a person grows older, their eligibility, if I was to say two things, I'd say eligibility will change the older you get, as far as how acceptable a health risk would be. But then once again, the level of coverage will definitely be there. It's not that you lose out on all options. Sometimes those coverage options to the person are limited based on health. If the person's in great health, though, they may be able to acquire all the same cares that they were before, but it is going to come at a premium. when you get into the baby boomer age. And once again, it's because that care more than likely is only a few years off, and they're not going to be able to recuperate costs before paying out on that.
And to further that, Josh, you might want to expand on this too, that the field of providers or insurance companies that offer services now has been drastically reduced from where it was, say, maybe even 10 years ago. So they can be a lot more selective on who they're choosing, and they can charge a little bit more for that too, because that the supply is definitely down.
Yeah, to speak to Tyler's point, about 10 years ago, there was close to about 200 different providers. And now I would say in general, I'd say there's about 10 or less providers that really soundly provide long-term care coverage. And so, yes, he's right that the field is limited as to who you're going to receive care from.
Well, that is the last question that has come in through the chat box. So those were all really good questions. So I think, Tyler, you can wrap it up, or if somebody has one last minute question, I'll keep an eye on that.
All right. Excellent. So we greatly appreciate everybody joining us today. It truly has been an absolute pleasure to be with you guys. We are offering that free consultation. So when you do have questions that are individual to your individual case, don't hesitate to reach out. Both Josh and myself's contact details can be found here. And you can always reach out to us, to the organization as well, to Deb Longcest. Her information is also found there. Or visit our website at onlyworkforyou.com. So with that, Julie, do we have any other questions that came in?
Not that I can see. Nope.
All right. So to be respectful of everybody's time, we'll stay on for a little bit longer, but that will conclude our presentation for today.